You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is David Smith. He's the senior analyst for the Morgan Report, which you can find online at silver-investor.com. Welcome to the show, David.
Hello, Jim. How are you? I'm
doing just great. I hear you're doing very well as well.
Yeah, I got all sorts of emotions going on this morning, watching the markets. Excitement, fear, greed, you name it.
I think that's what the markets are all about. What we were talking about just before we went on air is sometimes we get a second chance at getting those good bargains and adjusting our positions for the still evolving precious metals bull leg. Things are looking up.
Yeah, we do, and I think this is one of those times. And if our listeners go back and listen to what you and I have talked about over the last 5 to 8 weeks, we've talked a lot about how things 6 weeks ago were in a position where everybody was negative on the precious metals and the mining stocks, and it just looked like they were all going to go to zero. And the sentiment was just terrible. And, of course, that's the time when you want to try to buy if you have the resources and your plan kind of focuses that way. But a lot of people didn't do that. We know that for a fact. I was talking to an individual this morning who sold a particular stock. We mentioned the company but not the name. It was trading about $25 about 5 or 6 weeks ago. It went down to $23, and I think he sold on the low tick. And now that stock is almost $40. So, it's a good stock, and it's probably going to go a lot higher, but a lot of that reward is shaken out over the last 6 weeks since it's risen $15. But maybe a person has a chance to get in a little bit lower, maybe 35, maybe 32. But it's the approach you bring to the market, the mental approach, and I think we have that opportunity as individuals to do some of that over the next few weeks.
Now, that poor fellow that you were talking about who sold his stocks at their lowest point, should you be kicking yourself, or have you learned something from this and you should move on?
I think kick yourself once and then get back up and go at it again if you still want to be in the game. And I can tell you, I've done that sort of thing before. It's been a while since I've done it, but I know exactly what that person felt like because I used to do that quite a bit. And the thing is, we've talked too about not taking all the position you want at one time. That can keep you from having this to happen. Trying to buy weakness rather than strength. And sometimes you have to buy strength. The main thing is if you think the markets are going to go away from you, then buy some of what you need right now, but then try to buy the second and third tranche lower. And the reason that I think we have an opportunity here, and this is my opinion, but it's based upon, listening to a lot of the experts in the field. You may remember that David Morgan basically called the lows on the mining stocks and the metal stocks about 4 to 6 weeks ago. And he said he wasn't 100% certain, but he felt it was a high probability situation. And since then, they've really rallied, and I think those lows are very likely to hold. But, you look at a lot of other people that have written and have been writing on this, like Eric Sprott and James Turk and John Embry, and Adam Hamilton recently on seasonals for the metals. And these people are very accomplished traders and writers and analysts, and many of them are seeing the same things, that they believe we have a potential for a very large move going forward over the next 18 to 36 months, and indeed over the next 4 to 6 months, because we're in a seasonally strong period for the metals. So this is an opportunity for people that maybe have some dogs in their portfolio that haven't performed. Maybe they're up a little now, maybe they're not. But ask yourself, can you put that money to better use in something that may have a better potential than what you're now holding?
What's turned things around? Like you were saying 6 weeks ago, people thought things couldn't get worse, but now it looks much brighter.
Well, it's because people move on extremes of emotions, and so when the prices are down, you're hearing mostly negative news, and when prices are up, you're hearing mostly positive news. So the last few weeks, you've heard nothing but positive news about the metals and about the mining stocks, and of course they're up. And there's a very strong belief, and I believe this, and that is that price makes the news. And so, you can hear certain things, but the price confirms that. And so once you see that reflected in the news, a lot of that price potential is already gone. And I think that's where we are now for at least the short term, where a lot of that news that, that was negative is now positive, and the prices have turned to reflect that. And so people have to consider that the potential right now isn't as great as it was for profit, say, a month ago, but the potential's still there, especially if they can buy into some kind of weakness. And I think we're going to see huge volatility for the rest of this cycle, up and down, so people will have an opportunity to buy weakness if they can control their emotions and their greed and fear.
How does the labor unrest in South Africa concerning both platinum and gold affect all this?
I'll tell you, my personal belief is that what's going on in South Africa is a systemic situation. It's not something that's going to go away in a few weeks or months, even if they come to some kind of agreement with the labor unions. But the things that you're seeing there on almost a daily basis, and I read a lot of the South African online news sources and mining sources and this sort of thing. This is a very, very deep, serious problem, and it actually goes beyond mining. It's a social, political problem within South Africa itself, with the inequalities of wealth and this type of a thing that have gone on there. And it's not going to be solved anytime soon. And then when you add the complexities of mining in South Africa, the great depths, the labor-intensive nature, the danger, of these mines, some of which are thousands of feet deep, and it's something that is not going to be solved easily. And I feel really sorry for the people involved in it on both sides, and it's going to be complicated.
So that factor then is going to be a constant then, that you don't really have to...
Yes, and the net result for us as investors is that the mining, the metals prices are going to be moving. This is just one element of many, but the South African situation is going to drive platinum, palladium, and gold, higher over time on a consistent basis because of this, because South Africa today is still the third largest gold producer in the world, so this will have an effect.
With gold and silver stocks up, are we going to see more activity in exploration, or perhaps going back to older properties that now become profitable to go after?
There's some of that, but even when you talk about bringing some of these other properties on stream, you're talking about a lot of money to bring them on stream, and so there's money there to be made from that kind of a company that's doing that. But my thinking is, and again, this is my opinion, but I think we want to move with the strongest leaders. We want the best of breed whenever we can to invest in, because those are the ones that have proven properties that are profitable right now, that are likely to take us into the profit promised land, and have a few, out there, ones that could be 10 baggers, but could also blow up, but a small percentage of your money into that, so that you're riding the winning horses and you're more consistently making a profit than having your whole portfolio waiting on the possibility of something happening over the next few years.
In other words, make sure your investments are in areas that have a stable political background?
That's absolutely critical, and I've written a couple major reports for the Morgan Report on this just in the last few months about country risk, and there have been several stocks that had a lot of potential that have blown up and may never come back simply because of country risk. I think that's, if it's not the most important thing, it's one of the 2 or 3 most important things that an investor has to pay attention to when they decide if they're going to hold a company or add a position into it, because country risk can take a company down 90% in 2 or 3 days if it goes the wrong way and it's nationalized or something like this. It's very, very scary.
The Parti Québécois election in Quebec, it's a minority government. I know the leader of the party had been talking about higher mining royalties, but would that become a negative for Canada, or is that just one little segment of the country?
It can become a drag on the mining profitability, and it can, make investors a little bit more shy about going in, but that's something that you're going to see increased costs for taxes and whatnot across the globe. If metals prices go where we think they're going to go, because they're going to become more and more profitable, and all the people want to step in for their share of the pie, including the governments. I think it's very interesting, before this bull market got started in the 1980s and the 1990s, when the miners were going broke or were shutting down operations, not one person or not one entity stepped in and said, "Can we help you because you're losing so much money?" But the moment they start making money, everybody's there with a handout. It reminds me what they say, that, defeat is an orphan, but victory has 100 fathers.
Yeah, everybody wants to take credit for something that's good. We see that in a lot of businesses where, if something goes wrong, the little guy gets fired, but if something goes right, the boss is all too happy to take credit for it. Right. So with this attitude change, should people be a little more venturous?
I think so. Again, they have to ask themselves what their goals are, what their financial standing is and what their emotions are, because they have to be able to handle it. And if you can't go to sleep at night if the prices are down a few percent, then you shouldn't be in the leveraged ETFs, or you shouldn't be, even in a company that has a lot of potential but has a lot of volatility. But the price for being in these markets, I believe, for the rest of this bull market will be the acceptance of huge volatility. I think we're going to see days where gold is down $90 on the day and then closes up $75 or $100 on that same day. The things that we used to see that would take place over days, weeks, or even months are going to start taking place within the trading day, perhaps even in hours or so. And this is going to be very unnerving to all of us. But if you're going to be in these markets, you're going to have to be willing to put up with this kind of volatility. And that's why you want to try to buy weakness when you can of the companies you feel are very good, rather than buying strengths to kind of dampen that volatility just a little bit.
Like if you're going to be a bull rider, do that double wrap with the hand you use to hold on with.
Exactly. And try to maintain your balance. And that's a nice thing we've talked about before, where you don't go all in at one time. It's easier for you to accept price declines if you haven't put every cent you had on a particular idea at one time, because you're almost rooting for lower prices. And over time, it will make you feel better emotionally. It'll calm you down. And I believe it will help you make greater profits than if you simply went all in because you thought the price was perfect at that point.
David, great advice as usual. My guest has been David Smith. He's the senior analyst for the Morgan Report, which you can find online at silver-investor.com. You're listening to HowStreet.com radio. You can contact us at info@HowStreet.com. I'm Jim Goddard.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.